members from MSME fraternity, my colleagues in the jury panel that was there to decide the winners of today's awards, my colleagues from SIDBI, from NSIC, from other banks and financial institutions, ladies and gentlemen. See, there was a study by one very famous US-based institute, and it said that during 1900, then circa 1900, it was taking almost, a century for the human knowledge to get doubled. Then sometime in the 40s, it was taking almost 25 years for the human knowledge to get doubled. Come 80s, and it was taking about 12 to 13 months for the human knowledge to get doubled. And today, what is the rate of doubling of human knowledge? Any cases? It takes just 12 hours for the human knowledge to get doubled. So what is the reason? It is the exponential growth in information. We know that what the internet has done to all of us, the scientific discoveries, and of course the knowledge sharing platforms, Internet of Things, and all those stuff. So what does it mean? It means that the rate of obsolescence is faster than what we think. It is the universities and institutions of higher learning of ours, whatever they are teaching today, possibly when our boys and girls come out of those institutions, what they have learnt is obsolete, and maybe the jobs for which they are looking for will not exist when they come out of those institutions. So that is the kind of change that is happening today. Now you all know that people who are saying that just about a year ago that AI will take everyone's job. Now AI's job is taken by whom. So that is how the world is changing. I really do not know the way we do business, how long it is going to be relevant. Now there are 2-3 things to do justice to the topic that has been given to me. See, first it is the disruption in the business that the MSMEs conduct. Then the 3 pillars on which the MSMEs stand. The 3 pillars on which MSMEs stand are, of course, technology, marketing, and credit, and in that order. A lot of focus goes to disruptions in credit market. Credit is extremely important, but the safety of credit is dependent on the other 2 aspects, that is the technology, use of appropriate technology, and the market connect of the MSMEs. So we'll be touching upon all these aspects today in the next 10 to 15 minutes that has been assigned to me. Now recently there was a study by 2 leading international institutions, and what they say, that small businesses backed by digital solutions, they enjoy twice the revenue growth compared to their offline counterparts. So this is a research study. And MSMEs that have integrated with e-commerce platforms, today we all resort to e-commerce platforms. We have stopped going to even the Kirana stores, and we order on Blinkit. So they have experienced a 65% increase in turnover, and around 54% reported an increase in profit. So that is the kind of the increase in bottom lines with technology adoption. Now what happens when MSMEs adopt technology, or rather don't adopt technology? So there is a competitive disadvantage. If you don't, then your neighborhood, and will be out of business. Then of course the operational efficiency that need not be overemphasized, and most importantly it is the agility and adaptability of the businesses when we are adopting technology. So how do we overcome, or what are the barriers in overcoming technology adoption? There are mostly 2. One is the chalta hai kind of that attitude that all of us have, and another could be possibly the lack of resources. So as we are discussing that, the quick commerce has disrupted the kirana business, and we all are resorting to this. So these examples are too many. So all of us are aware. Now we'll talk something about the digital disruption in lending. Now, lending is something that we all are very, very keen about. As MSMEs, we all look for availability of finance at quality finance at good rate, at a faster rate. So all those stuff. Now we all know that Government of India has recently introduced the policies and initiatives to bridge the financing gap. Now initiatives like Aadhaar, UPI or GST, they form the backbone of what we know as the OCEN platform, that is Open Credit Enhancement Network. Now this digital lending has multiple benefits, including the improvement in the underwriting models. Now we'll talk about one or two recent initiatives. But before that, one very important thing that has been announced, we all talk about the budget announcements. There are very important announcements, but in those announcements there is something called the launch of National Manufacturing Mission. This is a very, very important initiative, and somebody was talking about the AI, and there is a AI mission to integrate AI with the university curriculum. A 500 crore program has been launched. So these are very, very I'll say that initiatives that is going to completely transform the landscape of both business as well as our academics. Now there was a recently launched GST Sahay application. Many of you might have heard. There is a GEM Sahay also, GST Sahay. That is using this open credit enablement network, OCEN platform, and account aggregator framework for providing untapped invoice-based financing. Now, we all were talking about, we have a very good cash flow, we all have, so much of business, but banks are looking at the strength of our balance sheet, they're not looking at our cash flows, they're only asking for collaterals. So those problems are gradually being addressed by using technology disruptions and by using the public digital infrastructure that we have. Whether it is the OCEN or using the OCEN, the kind of things that is happening, the disruption that is the GST Sahay, GEM Sahay, etc. Now, what it is helping, it is providing on-tap invoice-based financing to the micro entrepreneurs. And this app journey is completely paperless, and this covers the entire credit life cycle. Now, what it uses, it uses a GSTN, the bank statement, account aggregator framework, and the credit bureau. Now, of course, the other digital infrastructure like your eNACH, that the e-stamping and India Stock, etc., they also are used. So the collateral-free unsecured small value loans that the micro entrepreneurs, the nano entrepreneurs, they were looking for is here. It is a reality. Now, till yesterday, it was just not possible that to support a micro entrepreneur with a small value loan. Today, it is possible because of disruptions in the technology in the lending market. Now, there is another disruption that has happened. We all say that we are willing to lend, but we do not know when this business is going to go for. So that is the kind of you can say concern that many of the lenders, whether bank or NBFC or any other concern that we are having. So the probability of default that were possibly they were assigning to those kind of credit exposures was very high, and because it all adds to the total cost of credit, because that will be a credit cost and there will be other costs that will be assigned. So the risk premium will be very high. Now, that is one thing. And second thing is, how do we actually see, we have one model that is GST Sahay, but how do we know that if we are giving this loan or giving this assistance to this particular micro entrepreneur or small entrepreneur, it will be or it will not go bad. It will not turn into an NPA. So this fit rank that leverages the power of goods and service network, that is the GST, the bank statement and IT returns. So this triangulation helps to provide a ranking model for MSME lending. We call it fit rank. So this gives a probability of default in a scale of 1 to 10. This default prediction is for 1 year. So possibly more than say 96 to 97% accuracy. So a particular MSME lending is subjected to this FIT kind of algorithm that with the help of machine learning it runs the engine. It predicts 1 to 10 in a scale of 1 to 10 what is going to be the probability of default. 1 is the highest safety and 10 of course is the least safety. So when we integrate this kind of disruptions into the lending decisions of the banks and financial institutions, and of course there is the GST Sahay kind of application, then it is the decisions are now given not we are earlier talking about PSB loans in 59 minutes, it is now given in 5 minutes. No, so the things are changing so fast. That's why we say that the human knowledge is getting doubled every 12 hours. So because the input is such, because the technology, whether it is the AI, the machine learning, the different kinds of algorithms which use this, that has really disrupted the market in the MSME lending segment. And then we are talking about the other thing, that is the market connect of the MSMEs, how the marketing landscape is getting disrupted. We all know that technology is the solution. We have to harness the power of technology for giving marketing solutions to MSMEs. Now earlier it was participation in exhibitions, international and domestic exhibitions. But today it is technology which is actually doing this for the businesses to link with the marketplaces. It is not to say that the personal connect that happens during exhibitions, whether domestic or abroad, is not relevant, but it is supplemented, or rather the exhibitions are now supplementing the e-commerce platforms. To democratize the electronic commerce in the country, you all know that Government of India has come out with this ONDC protocol. So there are seller network participants which are actually the sellers, and ONDC is not it's not Amazon or it is not Flipkart, it is a protocol on which the SNPs actually provide the services of buying and selling. So the MSMEs are getting onboarded very rapidly on this, and Government of India also has very recently launched a scheme called TEAM, that is Trade Enablement and Marketing Scheme, TEAM scheme. And this scheme envisages over the next 2 to 3 years time, we will be onboarding 500,000 MSME units over the ONDC platform. So the scheme has just been launched. The portal has already been opened for registration by MSMEs and SNPs. It is piloted by NSIC, and it is team.msmemart.com. So on that the registrations have started. So very rapid speed will be helping them in preparing digital catalogs, in connecting to the payment gateways, handling the logistics. So all these things will be given free of cost to the 500,000 MSMEs over the next 2 years, and we will see that they also explore market both domestically and internationally. So these are the kind of disruptions that is happening, and of course today you must have seen that the trades platform is gaining traction. Again, it is not just the term lending by the banks. So to purchase a machine or to set up a unit or working capital finance, that is okay. But what happens to the post sales? It is the trades. The MSMEs mostly were suffering because of the in the kind of non-realization of the receivables. So the trades earlier, government has been attempting through the 90s. You all know that Delayed Payment Act was there, and so many regulations were there. But we always believe that the business problems, it is a business problem. Realized trade receivables realization is a business problem. A business problem can never be solved by executive action. It has to be solved by business solutions. So business problems should have a business solution, and with that objective in mind, the trades platform was launched, and today the country has 5 trades platforms. And what we understand that there are a couple of more which have lined up before Reserve Bank of India for permissions to launch their own platforms. So this is gaining traction, and Government of India also has reduced the threshold turnover for getting onboarded on the trades platform to 250 crores, and at the same time the MSME limit itself has been enhanced to 500 crores. That means many of the MSMEs themselves will also be required to get onboarded on the trades platform. So friends, the things are changing fast, and they are changing for the better. So the MSMEs have to do strategic planning for adapting to this technology kind of revolution that is happening. And so in this increasingly digital world, it is imperative that MSMEs need to invest. So we cannot really adapt to the kind of revolution that is happening in the technology sector. Banks and financial institutions, of course, today, fintechs, how they have completely revolutionized the lending landscape, and many of the banks are using the fintech platforms. When PSB loans in 59 minutes were launched by us, some 5-6 years back, it was at 59 minutes how a decision was given. That Honorable Prime Minister said that, by the time you, to the MSMEs, he was saying, by the time you close your shop and, ride back to your home applying for a loan, by the time you reach loan, a decision will be conveyed, whether it has been sanctioned or not. But in no time it has become past. Thing of the past. So that is the kind of changes that is happening. Unless we adapt to this, we will be succumbing to the competition. The competition is ruthless outside, and today that another thing that is happening world over is the carbon border tax mechanism. You all know about this. So again, ESG compliance. Not only that, measuring our energy consumption, measuring our kind of carbon footprints is also extremely important if we are going to be competitive in the international markets, and to face this kind of non-tariff barriers like the carbon border tax mechanism, etc. So friends, I think we have covered the entire gamut of the MSM that the technology revolution is happening, that is concerning the MSMEs. So I'm sure going forward, the message and the picture is very clear. It is we adopt or we perish. Thank you so much. Thank you for patient listening.